Okay, I think that we have all panelists here as well. Hi, Anton. Hi, Andre. Hi, Harry. I think we're missing Shamillah, but she should be joining soon. So hi, everyone. Glad that you could join. My name is Marton. I'm an investment director at Flashpoint. And the topic that we're discussing today is the digitalization of venture capital. And we have pretty amazing, hi, Shamillah, pretty amazing panelists with us. Anton from EQT, Andre from Earlybird, Shamillah from Dawn, and Harry from Beringea. So I don't know if you guys want to do a round of introduction about yourself. Maybe starting with Anton, who's the first on my screen.
Hi, my name is Anton. I'm an investor at EQT Ventures. I've also led and co-led our data and AI efforts for the past 5 years. So EQT Ventures is a multi-stage EU-based venture capital fund. We have 1.2 billion euros in assets under management, and we're the venture capital arm of a larger PE house, which is called EQT. And we've built a platform over the past 5-6 years that is called Moderator, which is our internal data and AI tool. So we have a team of 25 plus engineers that are building a data platform in-house with us.
Great. Andre, do you want to go next?
Sure. Thanks a lot for hosting this session here. Really excited to participate. So I'm Andre. I'm a principal at Earlybird. I'm based in Munich. I'm actually an engineer by training. Back then did also my PhD on the topic of machine learning and the value of data in venture capital, and then joined Earlybird a bit more than 4 years ago. And ever since, have 2 roles. So one is the investment side, so mainly investing into data and developer tools. And the other is also the build up of our internal tech tool and our platform called Eagle Eye. So started that from day one and still deeply involved. Earlybird, we are pan-European early stage VC firm. We have a bit more than 2 billion in assets under management, currently deploying about 1 billion in the active fund generation, mainly into seed and Series A, but also have the capacity to follow on later on. So that's it in a nutshell from my side. Really looking forward to the conversation.
Great. Yeah, Shamillah?
Yeah, hi everyone. Glad to be here, having had some initial issues getting into a highly competitive room. I'm Shamillah, I'm a principal at Dawn Capital. We're an early stage B2B focused fund based here in London, investing, Series A, Series B companies, about 2 billion AUM as well. Really looking to invest 10 to 30 million in first checks. Background in growth equity investing. At Dawn, I did a little bit more work in UK software. Spend time on our data work internally and also leader work in DevOps infrastructure at the firm.
Amazing. Thank you very much. Harry.
Hi guys, great to be here. Thanks for having me. My name is Harry Thomas. I'm an investment manager at Beringea. Well done, Martin, getting the name spot on. Always a tricky one. We're an Anglo-American venture capital firm based in London and Michigan. We've just shy of about $1 billion under management, and we're a technology investor. So we're predominantly Series A and Series B.
All right, good stuff. So the first topic I wanted to discuss with you is the sourcing, because as we mentioned it basically in the introduction of the topic, VCs tend to still use, most of the VCs tend to still use technology from the 90s. That is, Excel sheets and PowerPoint presentation. And, while these are convincing tools, but I think, it's kind of weird that we're investing in companies that are trying to shape the future, but we as investors are primarily relying on technology that existed already in the 90s and the 80s. So I think all of us here are trying to change that. So I would be curious on kind of hearing your thoughts about the sourcing part and how sourcing is changing based on sort of adoption of latest technology. So the first question is, do you think warm intros matter at all anymore, given, that we had sort of this pandemic where the actual in-person meetings got sort of reduced? So I don't know if anyone has any thoughts about that.
Yeah, I can start. Do warm intros matter? So it's interesting because I don't know about the rest of you guys, but typically when we invest in a business, we've actually had multiple touch points with them. There's an original touch point when you hear about the company because you saw it, through your tool, or you saw it as an announcement on LinkedIn if it's a seed deal, or a founder that you've heard great things about has started something, and that often actually isn't warm. So when I think about how many first conversations we have, many of those are cold, outreach to us, and also cold outreach to founders. So we actually value that interaction a lot. I think where warm intros are helpful, and it's two-sided by the way, is when it comes to referencing. I think it's helpful for founders to have a good sense of who they're getting at their cap table, who is Dawn, who is Shamillah, who's going to be my board, what have they done, what have they not done for people in the past. And for us as well to get a better sense of, how do you know this guy, why are you introducing him, and why is he or she an important part of the future software story. So I think it's overestimated how important it is. We'll talk to anyone who reaches out to us with an exciting story. What it's helpful for is definitely referencing on both sides.
But maybe I can add on.
Yes.
I think one important thing that you're saying is that like warm intros are important to know who you're talking to from both sides. Of course, in my personal opinion, I think warm intros do matter, but they're always best when the timing is right. And just as Shamillah said, we also like to build a relationship with the person that we're meeting, the company that we're investing in, and then you can use data signals, algorithms to make sure that timing is right. It's not too early, but it's also not too late, and then make sure that warm intro comes in maybe the right timing.
I'd agree with Shamillah and Anton there. I'd also say that from the other side of the table, they do matter in terms of identifying the right VC as well. It's helpful whether you're looking for the right firm, whether it's sector, geography, stage, or expertise, but also just experience within the firms themselves. A warm introduction quite often will put you in the conversation with the right investor within the firm as well, which is helpful. Again, not necessary, but helpful.
Very true. Very true. With that, I think it's actually interesting because depending on what stage VCs you're talking to, the sort of ratio of inbound and outbound is really different. So what I'm hearing from you guys is that it's around like 50-50 in your case, at least that's what Shamillah mentioned. But it would be also interesting to kind of understand what's the, in your best deals, was it more like inbound or outbound? Was it more like a cold outreach on your end, or was it just coming to you? Because I think it's also related to this question.
Actually, if I just jump and double click on this point of the ratio, there was actually an interesting study by Paul Gompas in 2020 saying that in the past, in their study, about 80 to 90% in the early stage was inbound and very little outbound, and actually that this ratio has significantly shifted in the last couple of years. So I think with the influx of capital, we had essentially a shift in terms of supply being the startups we need to invest in, and the demand, capital hunting for those startups. And I think with the influx of capital, we've seen a huge growth in demand, and VCs needed to be more competitive. And I think we've seen double that effect with all US firms suddenly coming over here to Europe and investing. So I think what we've seen is that VCs need to be creative in terms of reaching out to the founders, not only being competitive once you're in the process, but also identifying and getting in touch with the founders as early as possible, sometimes even at the point where it's just a concept and the company is not incorporated. And I think we ourselves, we've seen this shift significantly, and we shifted a lot to outbound capacities to really have people on the ground with local networks. So to your previous question also, do warm intros still matter? Yes, they do matter, but they just complement all of the other streams which are still out there. And as Shamillah said, we speak to everyone and we try to speak to everyone, but we need to be more aggressive and be lots of outbound driven. So I think that's the case for us. And at the moment, we are really shifting from majority inbound and really speaking of 90% inbound to majority outbound. So we try to get initial contact points, mainly also through our data-driven platform, as early as possible.
That's very interesting. The other question, which is I think what you mentioned is a good segue to this one, is because what it sounds like most of you guys have developed platforms that are more sort of the observation part, like monitoring companies and kind of deciding what the right time is for you to reach out or reestablish the connection. So with that, without actually revealing any sort of industry secrets, it would be interesting to understand what are some of the key points that you're monitoring. Obviously, they're the ones that are like super obvious, like LinkedIn employee numbers and so on. But it would be interesting to understand if there's anything else that you can reveal without telling any sort of secret that you guys are watching for, just for the benefit of the founders as well.
I mean, beyond the sort of, happy to talk through that. I mean, beyond the sort of the traditional ones, it's certainly no secret sauce that are hiring, recent fundraisers, awards, rankings, accelerator program, participation, things like that were interesting. I mean, 6-7 years ago, I remember we were doing a bit of work on postcodes, in fact, of company registered postcodes, spotting businesses as they were moving into co-working spaces or moving up to larger properties. That was an interesting one. We're using a platform called Deal Room, which we love so much. We actually led the Series A on. So I should probably mention that we are investors in it, but you should all get subscriptions immediately. But they're developing, finding new ways of doing this and spotting deals before, ventures before they even become companies. So looking at spin-out data, for instance, whether that's spin-outs from corporates or higher education institutions, seeing these businesses develop out. Also looking at patents as they're being developed, published, and protected. That's a nice telltale sign of things going on. So I think the key is just to keep on top of new, interesting signals, any signals that you can think of that might bring something out of the woodwork.
So I think interestingly for me here, there's this trade-off you always have to make as a VC about kind of quantum of data and how much data you're willing to look at to make a decision, and quality of data. And it's, I think my personal approach, and everyone at the firm is a little bit different, is to focus on the quality of data. And for me, the quality of data is the team, who they are and what their background is. And that's just honestly on LinkedIn, it's open source. It's available for everyone to see. But secondly, and I think more importantly, is who they're hiring, and once you've met them, why they're choosing them. And I think for me, those signals are actually extremely impactful, because a company could have added 40 people in headcount but have hired 40 terrible people. But if I know that they've hired a sales leader or a marketing leader or a product leader or a tech leader who references extremely well, has incredibly relevant experience, that speaks almost 1,000 words. It's worth more than the 40 additional hires they've made or the big office space they've moved into.
If I may just add to that, I think for us it's not either the breadth or coverage and volume of the data or the depth or quality of the data. So we essentially distinguish in two parts. One is the sourcing component, where our ambition is to have comprehensive coverage as early as one person starts thinking about concept. So right before the incorporation. So whenever you change something like, I don't know, on LinkedIn to stealth mode or working on something new, you should immediately get an entry in our database. And then essentially with the ambition of comprehensive coverage, we want to collect all of the data that's out there, independent of the quality, independent of the source. So we go for everything like, I don't know, product hunt launches, public registers, FDA databases, whatever is out there, we collect everything in the first place and try to collect that ourselves. Then second dimension is in terms of verification. So I actually did an academic paper a couple of years back, which was on quality and coverage benchmarking of commercial databases. So we also included Deal Room, besides Crunchbase, PitchBook, CD Insights, VentureSource, and all of those, where we had a look at the coverage and the quality, and essentially decided to include two of them. So essentially build on top of their API, build the data, integrate it through a data funnel to our own proprietary source data to have a kind of verification. And with this data, we don't only track that once, but we build a time series data so that we can see specific movement in the data that then helps us to really narrow down and identify those with an interesting momentum. And there I agree again with you, Shamillah. There it's really about the quality of the data, and then mainly about everything relating to the team. So LinkedIn, social media activity, sentiment in the social media activity, and so on and so on. So, and that's to finish my point. That's why I strongly also believe in an augmented approach where machines or algorithms or crawlers, whatever you name it, take care of the upper part of the funnel, so the comprehensive coverage, collecting all of the data independent of the quality, then get deeper into the next stage of the verification where you can build on top of these commercial database providers to then make sure you narrow it down to a manageable number of companies that we as humans can actually investigate and really meet in person.
That I think it's super interesting what you were saying, the last part there. There is no lack of interesting signals in the data that you can create with all the data that is available. The problem is the prioritization of all those signals and like being able to prioritize all those companies that you can find through those signals. We have learned the same over the years. We have actually built a self-learning system that is learning from outcomes in the market, so companies that get successful, but also based on how we label data internally, and that has learned over the past 5 years the focus of the fund, but also try to nudge us towards finding the most interesting companies, the most high potential companies, and hence because it's self-learning, we can't really say what the signals that it looks at is, but I think what we have seen is some very key signals, as what you all have mentioned, like team growth, team quality, but also something that I find interesting is the funding tempo of a company. Is usually a tell on how quick the company is moving, which is often a good sign for at least for VCs. Right?
If I may, one off-schedule question. So we also did the self-learning, essentially observing how we interact with the data and the founders so that our model can improve the balancing and screening. How do you make sure to not fully replicate your biases as an investment team or firm, but keep balanced? So how do you keep the balance of what the data tells you and the patterns of successful companies in there and your fund focus and the biases?
Survival bias.
Yeah,
sure.
All of those, recency bias, confirmation bias, survival bias, all of those biases.
There are surely parts of the bias that is hard to get around. We do, as I said, mix signals from the team with signals of objectively good outcomes. And of course, we have tweaked that over the years to make sure that we don't just find let's say similar companies as the ones that we have labeled as interesting, but it's of course something we work with continuously. We also work to make sure, back to the prioritization question, it is a prioritization problem, so to speak, to make sure that we do shift our focus in the direction that we want. So for example, if we as a fund would want to look at certain types of companies more, or a certain part of the fund, there might be a team that want to focus on fintech or whatever it would be, that part of the fund would over-index towards such companies and not just have the algorithms go crazy by themselves.
These are very interesting points that you're raising, guys. And I think, Andre, your specific document on the commercial providers, I think it has been super helpful. And this has been a reference point for me personally. Whenever someone asks me, what's the best database, I just point them to your paper, and it's like clear as day. I think just to add something here, I mean, we're also experimenting with ML-based solutions, but exactly what you mentioned, Andre, that unless you have like super complete time series data, it's like very tough to actually get to a meaningful result. So that's something that we've been working with internally. And that actually leaves us to the next point, and it's a good segue again, which is should you buy or should you build, or what's your? I mean, obviously you guys have built stuff, right? But are there like good commercial solutions out there that are complex enough and good enough that it could, serve as sort of a proxy or a replacement for someone who doesn't have a budget for 25 engineers, for example. Or what do you think about that?
It's a great question, Marton. We've done everything. So we started off by going the build route. Initially, not in-house like you guys have done Earlybird and EQT, but actually more external consulting-based work, develop a product that was what I would describe as an MVP, which is exactly what you guys are describing, i.e. get all the data, put it in one place, integrate it with local CRM, and create some kind of dashboard that allows you to track and create notifications and signals when things are exciting. The issue with that, honestly, is the maintenance cost, right? And on the overhead required to kind of keep that up and running. So I think you guys both mentioned you have big teams. Anton, you mentioned 20 people. That's incredible. But not every VC fund can have that kind of overhead. So we've actually gone for a commercial solution. We call it Synaptic. I think it calls itself Synaptic as well. It's a good solution, works really well. Gets all the data in. You can integrate with your CRM. It's functional. What you can't do is, of course, do learning on top of it. So you can't do any of the additional end applications that you'd want to with a personal solution. You can't do as much customization. But if you're solving for just getting data in, I think it's a pretty good solution.
I definitely think that now we have a team, so we are building ourselves. I'm obviously biased. I think the part that if you choose to build something, and that you would, or I would, if I would redo this, build myself, is the data part, trying to gather as much interesting data as possible and create a database. But then the layer on top of the data doesn't have to be. We have built a graphical interface, of course, a web interface, but it doesn't have to be that. And then that takes down the number of people that has to work on the project.
Good. Thanks, everyone. I think, unfortunately, we have to finish this very exciting discussion. I would love to go on about these topics, and I have still a lot of things to discuss, but we have to wrap it up. But thanks, everyone, for the participation, and, hopefully you will stay for the rest of the event as well. Thank you all.
Thanks for having us.
Thanks so much. Thanks for having us. Bye-bye.
Bye-bye.